Hold on tight. What you're about to hear isn't hype. It's history repeating itself in real time. Silver just broke $53 an ounce. Vaults are running dry across India, and the same financial elites who mocked metals for decades are now quietly loading the trucks while the world sleeps. But here's the twist nobody's talking about. This supply shock is directly connected to what's coming next for XRP. Before we go any further, smash that like button, subscribe if you haven't already, and turn on notifications, because the next few months are going to decide who walks into the new financial era free and who stays trapped in the old system. This video is for educational purposes only, not financial advice. It's happening again. The same story that played out in the 1970s when gold ownership was finally legalized and the price exploded 2,400%. But this time, it's silver leading the charge, and it's doing it in the middle of a deflationary storm. What's unfolding right now isn't just about metals going up in price. It's about the repricing of trust. When regional banks start collapsing, when commercial real estate defaults rise, when deflation compresses the entire credit system, the question becomes simple. Where does the money run to? And that's where silver and XRP, the oldest and newest forms of real value, begin to collide. You see, silver isn't just another commodity. It's the mirror of monetary truth. It exposes weakness in paper assets. And when supply evaporates, like it is right now, the panic spreads upward through the banking hierarchy. Over the last 2 weeks alone, 5 of India's largest silver ETFs have halted new subscriptions. Why? They literally cannot secure enough physical metal to back new shares. Vaults in Zurich, London, and Singapore are reporting tight conditions. That's the polite way of saying they're running dry. Meanwhile, the mainstream headlines are celebrating a market rally. Stocks are green. CNBC says inflation's cooling. But behind the curtain, the regional banking index dropped 6% in a single day. The commercial loan books are bleeding. It's the same pattern we saw in 2008. The canaries are screaming, but nobody wants to listen. And right on cue, Jerome Powell just hinted at much lower rates and a return to quantitative easing. QE during a deflationary cycle is the last gasp before liquidity implodes. They're not printing prosperity, they're printing panic. Here's what that means. The liquidity that's left in the system starts flowing into anything real. And when the masses finally realize that bonds, private credit, and real estate can't protect them, there's only one place left to go: hard assets. But here's the part the talking heads never tell you. The old guard, the pension funds, the sovereign wealth funds, the generational estates, they're not just buying gold and silver. They're building a bridge to digital liquidity through assets like XRP. Because in a deflationary world where settlement speed and cross-border liquidity are everything, XRP becomes the digital silver of global finance. Scarce, decentralized, and built for movement, not storage. You can feel it, the fusion of old and new money. The same people hoarding metal are now exploring on-chain custody and real-time settlement. They're preparing for the moment when fiat liquidity fails and the only trusted mediums left are physical metals and decentralized rails. So when you hear that silver just hit $53 an ounce and vaults are being drained globally, understand what's really happening. It's not a random rally. It's capital migration. The invisible hands of the system are repositioning, from debt to collateral, from speculation to substance, from paper to protocol. And that's where XRP enters the picture, because the same deflationary pressure-crushing credit markets is the pressure that accelerates on-chain liquidity adoption. Ripple's global custody expansion, their partnerships with IBSA in Africa, and the ECB's ongoing CBDC pilot, all of that is infrastructure being built to survive this exact storm. When liquidity contracts, the world scrambles for efficiency, and that's where blockchain-powered settlement becomes irresistible. Now, I know most people still think XRP is just a speculative token, but the truth is, it's the insurance policy for a system that's running out of time. It's the hedge against the collapse of synthetic liquidity. The same way silver protects you against currency debasement, XRP protects you against settlement failure. So while silver vaults run dry, digital liquidity is quietly being rewired. And both events are pointing toward the same destination, a global revaluation of real value. And by the way, if you've made it this far, stay with me another 45 seconds, because what I'm about to show you next connects the dots between this silver supply crisis and XRP's next liquidity shockwave. And yes, it involves a platform most people completely overlook. You've heard people ask me this 1,000 times. Where can I even position myself for this next phase? Well, I'm going to show you exactly how in a second, because one exchange has been quietly positioning itself at the center of this entire shift, and almost no one's talking about it. You've heard people ask me this 1,000 times. Where can I even position myself for this next phase? Well, here's the truth. The people who get ahead in the next wave won't be the ones chasing hype coins. They'll be the ones who understand where liquidity is about to flow next. And that's why platforms like Mexi are quietly becoming the backbone of this transition. I know, you've heard of Mexi before, but most people still treat it like just another exchange. It's not. It's one of the few global exchanges actively bridging retail investors to institutional-grade liquidity for assets like XRP, FLR, and other next-gen utility tokens. The reason I use it and talk about it here is because it gives you access to the assets the elites are quietly accumulating before the crowd even realizes what's happening. You can stake, earn, and position yourself before this digital liquidity wave hits full velocity. You'll find my link in the description below if you want to check it out. But understand this, Mexi isn't about speculation, it's about positioning. Now let's connect this back to silver, because this is where the pattern becomes undeniable. When supply collapses in one form of real collateral, liquidity looks for another. In 1980, when silver spiked, capital rotated into gold, and from gold into bonds. But this time, there's nowhere left to hide. The global bond market is on life support, the dollar system is under stress, and even commercial paper is showing cracks. That's why capital is now splitting, half toward metals, half toward tokenized liquidity. That's the part nobody's explaining to the average investor. It's not gold versus crypto anymore. It's gold plus crypto, two sides of the same hedge. The metals protect the body of wealth, while XRP protects the bloodstream. When one hardens, the other flows. Together, they create the first truly resilient financial immune system the world's ever seen. Think about what we're witnessing. Sovereign nations like Russia and China are dumping treasuries and buying metals by the ton, while Western institutions are accelerating tokenization pilots. Ripple's partnerships in Europe, the Middle East, and Africa are quietly creating an entirely new liquidity corridor, one that will eventually bypass traditional banking rails completely. It's happening so quietly that by the time the headlines catch up, it'll already be embedded in the system. And just like silver, XRP's liquidity supply is tightening. Exchanges are delisting, escrow releases are shrinking, and institutional custody is absorbing more of the float every quarter. Analysts estimate there may be only 1.5 to 3.5 billion XRP left circulating freely on open exchanges. That's microscopic liquidity when you're talking about a system designed to handle global settlement. It's the digital version of what's happening in the metals market, scarcity meeting utility. Here's what's even more striking. Every time there's a deflationary pivot, every time liquidity dries up, the assets that survive aren't the ones with marketing hype. They're the ones that settle value efficiently. Silver settles real goods. XRP settles real payments. Both operate outside the traditional trust system. Both reveal what's actually real. And if you're one of the people watching this right now who's been stacking quietly, whether it's silver bars or digital tokens, you're part of a minority that understands what's coming. Because make no mistake, the system can't reset without collateral, and XRP's network is being built to handle that collateral at scale. You've got Ripple integrating institutional custody solutions, banks like ABSA onboarding tokenized assets, and the ECB publicly testing the XRP ledger for interoperability in its CBDC program. That's not coincidence, that's coordination. And when you zoom out, you see the architecture forming. Metals provide backing, tokenized systems provide transfer, and together they birth a new hybrid economy where settlement happens instantly, globally, and transparently. Now here's where it gets really fascinating. As this deflationary wave deepens, governments and banks will try to flood the market with digital liquidity, central bank digital currencies, tokenized bonds, synthetic dollar systems. But none of those will work without a neutral bridge asset. You can't run a global digital system with 200 competing CBDCs and expect instant settlement. You need a neutral layer. And XRP was designed for that exact role, an interoperable settlement asset that doesn't belong to any one nation, but can connect them all. That's why the smartest investors are no longer asking if this transition will happen. They're asking when. And the answer is, it's already started. Silver is your early warning signal, every ounce being pulled off the market, every ETF halting new entries, every refinery running overtime but still missing demand. That's your canary in the financial mine. Because when physical supply breaks down, digital liquidity steps in to fill the gap. And this is where it gets emotional, especially for those who've lived through cycles before. The seniors, the savers, the disciplined builders who spent decades trusting the system. This is the moment their instincts are finally being proven right. The same people who bought silver at $10, who held gold when everyone laughed, who refused to sell their XRP when it crashed, they're not conspiracy theorists. They're the survivors of a broken era who never stopped believing that truth would win out. So when you see silver exploding to $53 and XRP quietly absorbing institutional demand, don't see it as two separate stories. See it as one timeline converging. The hard asset world and the on-chain world are finally meeting. The bridge between them is being built in real time, and the people who understand that, who prepare for that, will be the ones who walk into the new system already positioned. Because this isn't just about price anymore, it's about participation. The system's being rewired, and your only choice is whether you'll be watching it from the sidelines or flowing with it from the inside. And if you've made it this far, stay locked in. Because in the final stretch, I'm going to show you exactly how this cycle ends, what the institutions are preparing for behind closed doors, and why this convergence between metals and digital liquidity could redefine the global wealth map for the next 50 years. So here we are, the crossover point. Silver is no longer just a metal, and XRP is no longer just a token. They've become symbols of something far bigger, a shift in consciousness from blind trust in systems to ownership of real value. For decades, the elites have engineered bubbles and resets, always leaving the average person holding the bag. But this time, the tables are turning. The seniors, the savers, the quiet accumulators, they're finally ahead of the curve. They saw the writing on the wall when everyone else was scrolling past it. The vaults are empty, the banks are desperate, and the old financial order is cracking under its own weight. Yet beneath all that chaos, a new foundation is forming, one built on transparency, scarcity, and speed. Silver is the tangible backbone, XRP is the digital bloodstream, and together they form the nervous system of a new economy that won't ask for permission to exist. When the dust settles, those who held real value, not promises, not paper, will be the ones writing the next chapter. The system won't collapse into nothing, it'll reset into truth. And for those paying attention, this is your moment, not next year, not when the media confirms it, now. Because the bridge between the old and new world isn't being built someday in the future. It's already here, and those who cross early will own the century that follows.